Good afternoon. This is Clark Neighbors with BIS Commodities in Cedar Rapids, Iowa, with the market recap for the week ending April 21st, 2017. Grains had, in essence, kind of another sloppy, heavy week with lots of fund selling, additional selling by not only the momentum funds, but also some liquidation by the index funds. Commitment to traders reports this afternoon shows, as of last Tuesday, corn managed money short 171,000 contracts, adding 14,000 contracts this week. Wheat at or near a record short position of 142,000, added some shorts this week. And soybeans also down short, about 45,000 contracts. For the week, corn down 13 to 15 cents, beans down 4 to 7 cents, kind of minor. Wheat down 24 cents this week in the markets. The stellar continues to be the cattle market, which was up $4.50 on the week, and just the opposite side in the protein sector with hogs down $5.50 on the week. Dollar index is backed off to down under 100 again with some of the recent macro environment things going on. We haven't spent a lot of time under 100 on the dollar in the last several months, but that's not a big issue at this point. And it seems to me we've lost a little bit of that reverse correlation with a weaker dollar and stronger commodities, because the CRB index, or the commodity index, has also lost a fair amount of that recently, and a majority of that's due to weaker energy trade. So all in all, market tends to feel heavy as we go into the early part of the growing season. The window to plant corn, depending on where you're at, looks like there's a little window here through maybe the earlier middle part of next week. We'll see where we are with planting progress as of Monday. Most looking for somewhere in the low to mid-teens, slightly below the norm. But as we all know, we can put this crop in very quickly with today's technology and equipment. Basis continues to firm. Beans up the most over the last week or two. Seeing bean basis 10, 15, as much as 20 cents better over the last couple of weeks. Corn basis also continues to firm. The one thing we continue to emphasize that beans have been sold predominantly by the farmer. The commercial has the bean inventory, and on the other side of the coin, and this was reflected very well in the stocks report here in late March, that the producer, especially in the western corn belt, is the large ownership in the corn trade. So corn basis firmer right now, yes, with the farmer in the field, the availability and logistically to move things, and obviously with a flat to downward market has put some strength into the corn basis. But if one of two things happens in the next month, A, the crop gets put in the ground, and or you have the market firm up a little bit from a seasonality standpoint, throwing a little weather premium in potentially at some point, that's going to have a pretty dramatic and downward impact on basis, especially in the western corn belt. You have areas right now that are 45 to 50 under from now through the middle part of July. And some of the western part of the corn belt, you could see that even get weaker. But short term, market still needs to look for windows to fill in some inventory, keep the pipeline full with basis. Again, as I mentioned earlier, the cattle market seems to be the lone driver. Cattle on feed reports this afternoon came in 100.5. It's a little higher than what the trade was anticipating. Placements big, record amount for the month of March, 111%. That's about 6%, 5 or 6% higher than the trade was looking for. But marketings were also very big, nearly 110% at 109.6. The cattle market is very fluid right now. The cattle market is very current. On the other side of the coin, we have big placements, more cattle on feed, but the weights are way down. We're 28 pounds below a year ago, so average carcass weight down at levels we haven't seen in the last 5 years. So the cattle market is very current. It'll be interesting to watch going forward how the commitment to traders report, or excuse me, the cattle on feed report has any impact on the markets early next week, especially out in the August and October time frame, but also how current this market is, and watch and see where cash trade transpires next week, which was up another $3 to $5 again this week. In saying that, grain markets, key thing is planting progress, and any weather premium that may be involved. It's just that time of year. Other than that, it's fairly quiet, very mundane, choppy trade that feels a little heavy. Again, cattle market looks positive, and we have seen some pressure in commodities as a whole of late. If you have any questions on any of these commodities or need any input on marketing crops and or the livestock, feel free to call us at BIS Commodities. Phone number is 800-373-2525, or see us on the web at biscommodities.com. With that, have a very, very nice weekend.